So let's look at stocks that recently hit a 52-week low. And yes, there are some stocks that are absolute retail favorites on here. And it's actually a great list of stocks that everybody knows, but there are a few of these stocks that we've never talked about here on this channel, so we'll get a chance to talk about those stocks today. These stocks are down massively over the past year, but keep in mind, in the past, stocks like Meta and Google and Amazon, a whole lot of others like that, were down massively just a year and a half, 2 years ago. And of course, you've seen exactly what happens with those. So let's see if there's any diamonds in our rough this time with these 52-week low stocks. Just make sure you like the video if you like getting the truth without the hype. Now remember, kind of keep in mind, I don't care about 52-week highs or 52-week lows. It means nothing in the end. A stock can be at a 52-week low and it's complete garbage, or it's just completely overvalued. And of course, that means it's still got a lot more 52-week lows to make as it kind of moves forward, and vice versa. Just because a stock's at a 52-week high doesn't mean it can't be still significantly undervalued and a lot more runway to go in order to make higher highs as well. So for me, I don't really care about any of this here. It gives you a nice little list to pull from, I guess. But in regards to, because the stock's a 52-week low and therefore it may or may not be a buy, no, that doesn't kind of fall into my calculus per se when I'm analyzing a stock. It's not a part of it at all. But it does give us a nice list, so let's jump into the list here. So number one is McDonald's, and it's down 14% year to date. This one's actually trading at a multiple of 22, and the forward PE is 21. Now, remember, this was one of the riding high stocks during 2022. We're just, I don't remember what it was. It was like a PE like 40 or 50 or something utterly ridiculous like that. So the valuation is still, or has come significantly down. But let me kind of pose this question to you guys. McDonald's is trading at a forward PE of 51, but we got stocks like PayPal trading at a 16. Or if that doesn't really tempt you, what about Google trading at basically a 23? Or even Meta trading at a 24? If you kind of think through that and kind of see, hey, McDonald's is valued right around those. Do you think that growth rates in McDonald's are the same or potentially better than Meta, than Google, even PayPal? And I just definitively have to say no. So for me, this stock is still significantly overvalued at that stage. I don't see how much more growth McDonald's has in it in regards to the stock itself. So to me, it's still got more ways to fall, and it's just something I don't want any part of at this stage. I'd much rather take my, Meta, Google, and PayPal over McDonald's any time of day. I think there's just far more growth there, far more upside potential, more importantly. And so that's where my money would go before it ever went to McDonald's. So stock number two is Nikola. This stock is down 39% year to date. Now, guys, you know my thoughts if you've been on this channel. I bought it one time just as an April Fool's joke. Just one share, by the way. It wasn't any big deal. I've never liked this company from the start. I thought all the talk around it was silly. Way a long time ago. It was just kind of one of those things. It's another stock. They got no path to profitability. Everything is pure speculation. Everything about it is speculative in the end. It doesn't mean it can't not turn into something, but for right now, it's at a 52-week low for a reason, and that's because there's absolutely nothing there. So this is one I would stay far away from. Even with the other guy, the original CEO gone, and who knows what all is going to happen, all the legal consequences and everything else. Doesn't matter. There isn't a whole lot here, and I definitely don't see anything in the future in regards to what they're trying to do and where they're trying to go. So for me, this stock I want nothing to do with, and it deserves every bit of that 52-week low, and who knows, it may make new lower lows. All right, so the next stock up here, I'm kind of surprised actually that it was as beaten down as it was, but hey, it is what it is, and we got to talk about it. So stock number three is Barnes & Noble, and it's down 94% year to date. All right, guys, I hate to see this. I love to read actual physical books. I like going into Barnes & Noble and looking at all the books. It's just one of those deals, and maybe it's because I'm older. That's what I like to do. However, I can't say that it's just packed full of young people. And more importantly, young people are reading on their devices. They're just more apt to do that versus a book. I understand some like to go back to books, but in general, the population as a whole is not buying books in physical stores the way they used to. And those stores are massive. They have a lot of inventory, a lot of overhead. And I just don't see any way in the future this business thrives, much less survives in its current form. It needs a significant shift of some sort, and I have no idea how to turn around a beast like this without some sort of a bankruptcy filing, so that way you can kind of restructure and then come back stronger there. I'm not saying they're going to go bankrupt, but there's a reason why it's down this much just year to date here. So again, it's another stock I want to stay far away from, even if it makes me sad, even if I really enjoy the store itself. There's very few people like myself versus all the other folks who are choosing other options for their particular niche, their particular product. So it's one, unfortunately, I'm not going to be buying regardless of what low it makes. So stock number 4 is Walgreens, and it's down 39% year to date. Oh, guys, you guys know this one is a pure turnaround play. They've already been through one management team trying to kind of do the turnaround play business, and we're on management team number 2 now, trying to turn around the business there. I don't have any real fear of bankruptcy because it's just the way they bring in money. I think especially as kind of boomers are aging, at least here in the US, they prefer to go into physical pharmacies. So I kind of delay some of the online pharmacy stuff that's happening. They have a long road ahead. And for me, I've already built out a position in this one. I bought it just simply for the dividend, despite the dividend cut, which sucks. Hopefully they're able to bring that back in the future as they turn around the business there. Thankfully, I don't need the dividends now. It's there for the future. But this is one that you definitely have to be cautious with and understand it is a turnaround play. It is not a steady dividend play like it used to be. It's in a different category right now. So you have to understand that if you're considering this stock, understand what it is, what they can do, what they can't do, and long-term, what is your goal with that stock more importantly. If it kind of meets those needs, it's worth considering, especially at these prices. If it doesn't, I don't know. It's one of those deals you kind of need to understand exactly what you're doing. You really got to dig into those management teams and those earnings calls to really see what's going on and kind of what's feasible for the future. All right, so on to the last 2 stocks here. There are a couple stocks. One I'm pretty sure I've never talked about before. The other one, it's been a long time since we've talked about here on this channel. So let's jump into the last 2 stocks here that we're going to talk about. So number 5 is Desktop Metals, and it's down 32% year to date. As you guys know, they just executed a reverse stock split to basically try and stay listed. Never a good sign there in regards to the company. And really the entire 3D printing space is just down, and I don't understand why. And it's a space that I really thought was going to do very well. It's just, I really enjoy the products. DM is obviously one of the better in class. Desktop Metals is one of the better in class in regards to what they do. But just overall, the contracts have not come. Additive manufacturing and a lot of the other things that they do just has not come in the scale necessary in order to push the stock forward. Now, it could be a product of, hey, a lot of this stuff is expensive. A lot of the equipment's expensive. Obviously, higher interest rates hurt that. So we'll see if they're able to pick up any momentum as interest rates fall. But it is a very tough competitive environment. And yes, the stock is speculative. And you guys know how you handle speculative stocks is by position size. You don't balloon out massive positions in any speculative stock. You start off small and then you let them earn more of your dollars as they move forward and as they execute as a company. But for right now, no matter what 3D printing company I've looked at, they are all struggling in regards to generating more revenue, more profits, moving closer to that profitability range. That is just tough all the way around. So it's definitely one. It's speculative. You need to understand that it's speculative there. And if you're choosing to buy it, you got to be willing to also lose all your money because that's how speculative plays work. They're just as likely to go down as they are to go up and give you a great return. And in some cases, actually more likely to go down than they are to give you a great return there. So you got to understand that when you own any speculative stock, not just this one, but any speculative stock, that is definitely a potential there. And you got to be ready for that potential to happen. And number 6 is Li Auto, and it's down 45% year to date. That's another Chinese automaker, Chinese EV automaker there. And again, this is just dependent upon China, and I'm not surprised by this at all. There's been other Chinese makers that have made all-time or 52-week lows recently as well. It is not surprising at all. I think long-term, all these companies are going to be okay. Again, I haven't dove into Li specifically, so I don't know a lot of the specifics around it. But in regards to the Chinese government pushing everybody to EVs by 2030, we know that's absolutely going to happen because if they want it to happen, it's going to happen. And of course, all those Chinese automakers stand to absolutely benefit from that transition over. But right now, the Chinese economy is in a lot of trouble, and that is going to weigh on all the stocks, not just in terms of the numbers, but also the sentiment around the stocks. Even if they were printing money, I'm still not sure. It may have prevented 52-week lows, but I'm not sure you'd be seeing massive runs up in any sort of Chinese stock right now because the economy as a whole is in trouble. And until we have some clarity on that, until we actually see some positive things moving forward out of that, they're just very, very tough. And the road with Chinese stocks is going to be very, very tough. Now, long term, might very well be some potential there, but you got to be willing to ride out this downturn, and who knows how long it's going to be or how low Wall Street's going to beat down the stocks in the meantime there. So it is risky. It is something you need to assess and understand the risk with Chinese stocks, which you guys know I mitigate it with position size. I just will never balloon out a Chinese stock position size the same way I would a similar company in a US company, for example. It just wouldn't happen. And if you want to see all the stocks on my watch list, complete with price targets, and see all my buy and sell alerts on stocks, be a part of the $250 portfolio challenge, take 5 courses for free, use the stock analyzer tool for free, you get your free coaching for free, and so much more, guys. Check out the pinned comment down there for my group, see if my membership's right for you. 2 different tiers for you to pick from there. One, if you just want to take advantage of the $250 portfolio challenge and get access to the library of over 500 videos for you to access anytime you want, educational videos. Or if you want to actually take on a full membership there, which is kind of the other tier there, where you get everything, including direct access to me, everything that I have, everything that's ever been included in the group, you get access to as well. And of course, all the future things that are coming as well. So check out the pinned comment, see if your membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.